In this episode, Ryan and I discuss examples of people who have reevaluated their preconceived ideas of capital. We touched on inflation and charitable giving opportunities with the infinite banking concept. We had fun. Hope you enjoy. Thank you for listening. Welcome to the Banking with Life podcast. I'm your host, James Neathery.
And I'm your co-host, Ryan Griggs.
Excited to be here. Thank you for being here. Actually, we come prepared today. 20 miles south, Fort Worth, Texas, the world headquarters of Banking with Life.
It's been a minute. How long has it been since we've done this?
I don't know. I had
a month, 2 months.
Is that like you asking a question you already know the answer to?
Well, I'm guessing.
Okay, I don't know.
It's good to be back. Good to be back.
Yeah. I've my family and I have enjoyed a vacation through. We drove from here, Fort Worth, to New Orleans, stayed a couple of days, and on to Florida. You know, there's a stream to and from of cars from Texas. Unbelievable. Yeah. And I love New Orleans. I love history. I love architecture. I love the French influence. But my gosh, that town needs a thorough bleaching, at least around Bourbon Street. Nothing but love. I'm not a hater. All right. Clean yourself up. I'm just saying. Yeah. So that's been a week, and then a week before that, I don't know where you were. You're probably off. No, you had family from out of town.
So my birthday, we're here in early August 2021. My birthday's late July, so I had family in from California. Went out on the boat, had some dinners, hanging out at the pool. It's been so hot in Texas, so it's in the water or inside most of the time. Yeah, that was nice.
So that accounts for 2 weeks. Where's the other 2 weeks come from? Do you know? Or was it just scheduling?
Otherwise, trying to keep up. I mean, it's been, the business comes in waves, I feel like. Yeah. That's how you originally explained it to me, and it's absolutely the way it's worked out. And there's typically a summer wave for whatever reason. I don't know why, but you get a whole bunch of new people in, and then they go out in force, paying premium, building cash value, and then kind of have a little bit of a lull, and then here comes another wave. So late last month, wave was ending. Here comes another one starting up.
Well, that's because, we don't spend a ton of money promoting, And I say that to say this, the AV Ninja, he looks at questions and algorithms, not that we're scientific, but, he pays attention to some of that at some level. And maybe a couple of weeks ago, you're looking at different videos. There's like 5 or 6 comments or 25 comments, but 800,000 views. It's like, how'd that happen?
Yeah.
Which is fine. There's nothing wrong with marketing.
We had the opportunity, you and I recently, and had the opportunity to talk to the executive staff and leadership of a certain life insurance company, and they were aware of the podcast. I can't help but smile at some of the questions they're asking. So is that really good for a lot of your lead generation? And I'm like, dude, I don't. It's like, where do your clients come from? Well, all
over the country.
Exactly. They watch the podcast. I don't. What are the views like? I don't know. Like, click on a video, find out. I'm just not interested in the whole marketing scheme. It's, you play the algorithms all you want, and then the algorithms are going to change.
Well, if you think about that, right? If you don't feed the machine, right, monetize everything, buy all the exposure and the subscribers and the commenters and all that, I'm just thinking out loud, right? I mean, I've been around for a little while. It's like if you don't do that, you get a certain amount of, promotion just from, consistency or view time or whatever. But if you're spending a lot of resources, i.e. money, promoting, and you stop, what does that do to your algorithm, right? And then if you don't do that and you start doing that, it's almost like an encouragement from social media platforms to get you to buy into that narrative.
Yeah. Right? And then become dependent upon it.
Absolutely.
Just like life insurance agents with their third-party software. I got a text yesterday. I get these spammy B2B texts. I've seen that, they'll earn $5K to $30K using our proprietary software. And I respond back. It's like, are you trying to like sell me IBC software? Like maybe you should go watch.
Yes, we are.
Maybe you should go watch the podcast. And oh, by the way, getting agents dependent upon a third-party software program might not be the best way to improve communication in this industry. I don't know.
Well, I don't know. Who's it good for?
Yeah.
Not the agent.
Yeah.
You know, I mean, who wants to be dependent? Oh, wait. And then if the agent's dependent upon the software and they're going to go out and use it and they're going to make their prospective client, their clients, dependent upon that software. Mm-hmm. It's like who? I mean, the infinite banking concept is all about independence, freedom,
autonomy.
I mean, it's like no, don't be dependent upon. No, that's a hard no.
Yeah, the individual shouldn't be dependent upon third-party lenders and the conventional credit system. Agents,
they shouldn't be dependent upon their agents either.
Right.
Or their advisor.
And then the agent shouldn't be dependent upon these third-party platforms
or
to
the
facilitate
companies.
a sale.
Yeah. Well, I'm glad we agree on that. Well, we've had lots and lots of conversations on that. I mean, I talked about that several years ago at Nelson Nash Institute. And, you talk to a room full of agents, and I think the message resonates. I don't know. I hope it does. But
half my time-ish, some more, some less with clients is talking through some of the things that I know they've seen online they're getting from the other financial entertainers, the gross dividend crediting scale stuff. Well, what's such
the
and such company?
4%?
Yeah. Well, what's such and such company's dividend rate? Yeah. And we got to talk through that, which is fine. These are legitimate questions. People are hearing about it out there. I certainly don't mind going over it.
Do I get to go cash on cash in year 2 or 3?
Right. Well, then IBC is always presented as one thing, whether it's 1090 or whether it's a certain premium level or whether it's a certain structure.
You're all the same.
Right. So then we got to break that down, right? We got to talk about, if, depending upon your appetite for liquidity and how long range you're looking and whether you have other capital and you're in the intensity or the urgency of your need for capital now, all of that is your age, your underwriting status, all of that's going to determine and influence the ultimate structure and, of course, the premium level. Right?
Sure.
So we got to go and it's the same thing. If it's not necessarily an improvement if we discard our preconceived ideas about life insurance that we get from the conventional industry and just substitute them with other preconceived ideas that are cloaked in the vocabulary of IBC.
Different things. If I throw off that yoke of I've been conditioned as a consumer how to look at finance, how to look at life insurance. I need to throw that yoke off.
Yes.
Right. And then go from there.
Right. So, well, then don't go mess around and pick up a new one.
That's exactly. Yeah. That's my whole point. That's a whole nother yoke. Mm-hmm. Right. Even for the financial professional, I don't always, but I listened to Q&A number 25 for a particular reason today and last night. And I'm like listening to that and I kind of discussed some of this and I thought I did a fairly good job and I was almost going to take that down.
I know.
So anyway, shameless plug, Q&A number 25.
I don't know why you get these ideas in your head to take stuff down. I listened to it and I was like, hey, good job. Like, this is, little audio things that can be addressed, but substance wise, content wise, great. It's like, I thought I was thinking I was going to take it down. I'm like, no, why would you do that? It's good.
Well, I'm gonna do a bit of an amendment, an addendum, and a correction or a clarification.
Yeah.
So anyway,
slight clarification, like very slight, but anyway.
Yeah, the points that I made are absolutely correct. Yeah. I mean, absolutely.
You said a second ago, been conditioned. People are conditioned into how to think about finance. You recently had an interview with a client by the name of Michael from California.
Hey, what episode was that? He flew in from California. Great guy.
Super recent. I don't know the number offhand, but
it was like
published
Monday.
in early August 2021, late July 2021. I mean, it came out recently, but he referenced something, and this happened. You get the rich dad, poor dad people in that whole environment. So Kiyosaki, Garrett Gunderson, the accountant person, and all that. And then we're talking about this idea of not substituting old preconceived ideas for new ones that may or may not be reflective of reality. There's this idea, and let me say this and you tell me what you think, that an asset is something that puts money in your pocket and a liability is something that takes money out of your pocket. I get where that's coming from, right? But look, hold on.
Okay.
Hold on. So I always bring it back to capital because I can think of an asset, something of positive value. So you could sell the item, receive a sale price, or you could leverage it. There's equity there, right? There's a positive monetary value in this thing that you own. Right? And this thing feasibly may not be throwing off a cash flow, right? In other words, this thing may not be putting money in your pocket.
Right, because that takes into the account cash flow the way.
Right, hold on though.
Okay.
All right. So this thing may not be putting money in your pocket. In fact, the thing may have an ongoing cost associated with it.
It may.
However, so it may be taking money out of your pocket, right? If there's no cash flow in, but there is a cash flow out, that nothing's going in the pocket, some's coming out. But it could be the case that the value of the asset itself is rising faster than the amount of money that you got to pay out each for maintenance costs or what have you. Okay, that's still an asset.
Absolutely.
So something that could, under that taxonomy, be classified as a liability is actually an asset. And if we start with capital, if we start with the perspective of capital, monetary value of assets that you own, right? If you start there, then problems like this are eliminated. And think of dividend paying whole life.
There are two different types of assets. Then if one throws off a cash flow and one doesn't, right?
I know, and all that's fine. But I'm talking about this framework, this setup that says an asset is something that puts money in your pocket, and a liability is one that puts money out of your pocket. It's maybe, but not always.
Right.
And in fact, there's areas where that could be wrong.
So then, that goes back to your earlier comment. That based on some of the questions and some of the things that you have to work through with newly or prospective clients or people that you're engaging with, you can almost tell who and what they're listening to.
Oh, it's immediately obvious.
Yeah. When you were just saying that, I'm thinking, man, listen, I have a tractor, right? It costs money. It's an asset. And currently it's an appreciating asset just because of the supply chain and the what's going on around the world as far as governmental, politics. And anyway, but a garden hoe, I can purchase that one time, right? It's not going to throw a cash flow. It's not going to cost me any more money, right? It'll cost me time, effort, and energy when I put it to use. And the result of its use can either cost me money, right? If I do it wrong and have to pay somebody to come in and correct it, whatever the work is, or if I do it correctly, then it could increase the value of the land or the property or, that's I'm talking about a tractor and a hoe, very, very different, but application is just, the difference is scale, right?
Yep.
I can grow beef, I can grow grass or whatever.
Yeah.
But it's still an asset and it has no cash flow in and of itself. So it's a tool. And how's a tool? Every asset should be a tool, in my opinion. And, I speak a lot to that life insurance is an asset.
Yes.
If you own it, you should know how to manage your asset. Going back to the dependency, you should not be dependent upon third-party software. You should not be dependent. You should not even be dependent upon the home office staff. You, the individual, you, the agent, you should not be dependent on anyone.
But dividend paying whole life's a great example here because, if I have a contract and I'm relatively fresh into this and I haven't taken a policy loan yet, I haven't taken some sort of cash flow or distribution from the contract, but I'm paying money in, money's going out of my pocket. Does that mean that this contract's a liability until I decide to take a policy loan against it?
Well, it depends on who you talk to.
Of course not. The answer is no.
Yeah, no.
It's still an asset, and the value is the cash value is continuing to rise and will be of use to you down the line. So the broader, Nelson always talked about proper classification, and so I don't like, or I get a little triggered maybe when these classification systems that I think are meant to facilitate marketing and to, let's say, maybe generate leads for my real estate advisory education, quote unquote, education business, which is what a lot of that whole structure is built upon. It's like, oh, how convenient. I have a taxonomy that points to what I'm, which could be fine. It could be right? It could be correct. I just don't in that particular little case, I don't think it is. And look, I've read the Rich Dad Poor Dad stuff, and I know that's been of value to other people. Same thing with HELOCs. Yes, they're better than mortgages. Same thing with Ramsey. I don't hate everything he says, but it's okay to have a little bit of nuanced criticism about these various things that come up so that we're correcting errors. Again, going back to Nelson, constantly course correcting, like the pilot. Flying somewhere, constantly course correcting. So we need to just realize these things and not idolize them, not put them up as like the end all be all, and take what value we can from it and then move on.
Going back to Michael and classification, I loved when he was talking about how hard of a taskmaster he is on his money. I
love that.
Oh my gosh. And did proper really classification with vision, right? And into the future. He doesn't look at a dollar as a dollar.
I caught that too. He said something to the effect of how I think about money has changed. Yeah. And he didn't say this specifically, but from what he was saying, I was like, you're thinking in terms of capital. You're thinking like,
absolutely,
you're thinking like a banker. If we talk about it in occupational language, you're thinking like a capitalist. If we're talking really praxeologically or economically, but, he's seeing the alternative use, right? And I say this with people too. We've talked on and on forever about the relationship between capital and opportunity. Mm-hmm. But there is a scientific link, I believe, and I will argue in my dissertation, that there is a link between capital, how much financial value someone knows they could get to, that they believe, that they've judged, that they've discerned to be embedded within their assets. There is a link between how much, the quantity of that capital, and the quality of it, how easy it is to get to it, and the opportunity, the nature of the economic landscape that they see. Right? Someone walking around who's more capitalized sees the world, sees the economic landscape, sees opportunity differently. The set of circumstances that they have every reason to believe, if they were to intervene within, right? If they were to impose their will, leverage their purchasing power on a given set of circumstances to transform it into something better, the range of those opportunities, the range of those circumstances, the scope of them widens, and the potential value to be gained from acting upon them increases, right? And so I get a lot of questions often from new clients, and have in the last week, about, well, what do I do with my cash value? What's the best way to use my policy loans? And my response a lot of the times is something like this. It's like, look, I'm not trying to dodge your question, but we've all heard of like insider trading, right? The things that nobody else knows about, that only a few elite special people find out about. And the whole reason people do it is to go get these tremendous outsized gains that are not available to other people in the market. All right. Well, the same principle goes here, right? If I knew the highest and best use of your money and your circumstances, given your background and your unique sets of skills and talents, well, then it wouldn't be the high value opportunity that it'll be for you, right? There's only certain things that an individual on the ground at a specific time in a specific place with a certain amount of capital and a certain amount of skills and perceptions and beliefs about the world is going to experience and encounter. And those things are where the greatest gains, the greatest revenue, the greatest profits are. And I could tell you things and people, you've interviewed tons of clients here who have talked about the things that they've used their policy loans and cash values for. And we could go over that. It's the ATIONs, right? Vacations, medications, you name it, all those, the things that we're going to pay for, educations, the things we're going to pay for anyway. Mm-hmm. And yes, we can do that under our control and at a lower cost in terms of interest by volume and all that. But we shouldn't lose sight. It's unseen, right? It's something that's going to come to you.
That's a lot of ground you're covering here. That's a lot of ground, and repetition is okay. Look, not only when you have capital, the landscape does look differently because you think differently. Now we're getting off into psychology. I don't know what your dissertation is going to be on.
I don't think that's psychology.
I believe it is psychology. The behavior because of one's thinking. I'm not saying it's a scientific study of action, but it absolutely is psychology.
There's both. There's how you think, but then you can't
and how you're thinking affects your behavior,
right,
in a given person or a given group. And I'm just saying here, a simple point that I've made over and over and over: it's your ability to recognize an opportunity. Your ability to recognize an opportunity increases because you have capital. I mean, that's something that I discovered personally, and I have seen in my clients. And then, two, going back to, well, what do we do? What do we do? It is okay to build capital. That could be the focus. That is the purpose. That is the action, and the reward is in the action, but it's in the future, right? And current. I'm not saying that there's not a reward. Creating discipline is a reward, immediate reward, right? But it's a long-term endeavor. So, it is okay to build capital, which is to your point there. But you see that an awful lot. Well, I've got a cash value, so I need to take a loan immediately because you have cash value. No.
Yeah. And I don't mean to say that there's not a psychological element. There certainly is. But like Mises and other Austrian economists have been careful to distinguish between psychology and praxeology, or the science of human action. And I think there's both elements. I think there's a sense, praxeologically speaking, economically speaking, that there's a transformation in the way that we are that's even deeper than the psychological element, that may cause or lead to changes in psychology. But we go all the way back to Mises and human action, the 3 tenets of action. You have to have felt uneasiness, you have to have a vision of better circumstances, and you have to have belief in a way to get there. And I think that capital, the financial value of assets,
like a glove.
Yeah, that capital, it interacts with that third element, right? The belief in the ability to get there. The more capital you have,
it interacts with all of them. I'm going to be highly uncomfortable if I don't have any capital and I'm dependent on someone else. Right? So capital interacts with that too. Right? And if look, there's is it Jim Rohn, I believe, that's like, there are only 2 great motivators in all of life. The fear of loss or the need for gain. Right? And I'm like, well, okay, I hear that, and I kind of believe that, and it makes sense to me. And it's like, okay, well, listen, if somebody called you at 4:00 in the morning, right, and and you're not a late person, you're sound asleep, and somebody says, "Hey, Ryan, there's somebody outside stealing your truck. They're trying to break into your truck." All right,
this is Texas. You know what's going to happen.
All right, and maybe that's too, that is too high of a value of a.
I really like my truck.
Yeah, it's a nice truck. And dang, we talked about a whole podcast episode was spent on you searching for foreign built automobiles, and they weren't trucks. Anyway, so if somebody called you in the middle of the night and said, "Listen, somebody's trying to break into your house, or break into your barn, or break into your automobile." It's like that can motivate you depending on the value of that truck, or, what's in your barn or what have you. Fear of loss. If somebody, calls you at 4:00 in the morning and said, "Listen, you've won the lottery. You've won $5,000. Which one is going to motivate you to get out of bed?" In my example, let's say your car's worth $5,000.
Yeah, it's greater than the perception of value to be gained.
But I'm uneasy. And we're talking about my capital. It does apply. It's my point.
No, I like that. And it connects too to a conversation I was having with speaking of psychology, with the individual by the name of Kanal. Kanal, I think, listens. So this is
look at you throwing the names out there.
Oh yeah, they listen. Got to throw some love. So he's in California, and we were having a conversation about psychology. We have reached the end of the process. This man is doing well. Right, early 40s, business person, multiple manifestations of this business, right? Several enterprise in different regions, doing very well.
So he understands capital and cash flows?
Well, yes, and then we've also been adding to that, right? And he shared that he didn't grow up super poor. It wasn't like total poverty, but it was, lower class, where you're fed and you're clothed, but money's tight, right? Sure. And consequently, as he became successful, as he became successful and started his own family, and he's a first generation immigrant, and did really well in this country and in California in particular, he built up a substantial checking account balance. And we're talking with premium, and we're talking about a premium and a structure that legitimately corresponded to his impressive financial activities, right? And if you're generating a lot of cash flow and managing a lot of cash flow, well, then you need a policy that will accept a substantial cash flow in the form of premium so that you can become your own banker in a timely fashion. Now, for someone who, this was his first contract, right? So for someone who's coming to the table for the first time and wants to implement this correctly and appropriately, and we're talking about the premium that would be appropriate to do that, there's a little sticker shock, right? I think it's a big number. And
yeah, but that's relative to who the individual is.
I know, but this is where he's coming from. And so we're talking about, deploying some of that checking account balance and that money that's stocked up in the bank account to transition it over into his system, his property, his asset, right? Where he's going to be paid a dividend, where he can control whether or not to take a loan and when or if to pay it back and so on. And so he brought this up. I didn't even bring it up. He's like, Ryan, this isn't about whether to do IBC. This is about how much. Sure. This is about the premium. And he's like, I need to take some time, and I leave time. There's no rush when we do this, right? It's like, I need to take some time and I need to work through this and wrap my mind around, and move beyond, develop beyond, evolve beyond what is a result of my circumstance, or a result of my, origin story and so forth. He developed an attachment to having a significant checking account balance, and I totally empathize, and I shared my story with him, and I'm like, yeah, I get it. I totally get it. And there's a sense in which I'm in that process too. Like, we got to get.
You're all in that process. Yeah. That, and I'm just going to interject here that it's like, I don't care how much the premium is. If it doesn't cause your eyebrow to raise, if it doesn't cause, a little sweat beads to break out upon your nose and upon your brow, or if your spouse doesn't look at you and question your intelligence, it's probably not a legitimate number. Now that doesn't mean that's where you have to start. You can back off and start where you're most comfortable, but you shouldn't. Look, all of growth in our thinking, in our physical, bodies, taking care of ourselves mentally, physically, financially, the growth exists outside of your comfort zone. So if you are throwing out low numbers, all of us, I did the same thing. I threw out my first policies. I'm ashamed of how small the premium was, although it was much larger in premium than I'd ever paid before. And I've said it many times. I started so small because there's a lack of faith, right? I thought I understood, and I was pretty sure. I expected the companies to do what they said they were going to do, and lo and behold, most of them did. And the ones that didn't, I'm still not hurt. I'm still not. It's not a tragic era. So we all tend to start too small. And when we get into the realm of legitimate numbers, premiums for us, they're substantial. I don't care if you've got $1 million income, a $5 million premium, a $2.5 million premium, $1 million premium, or a $5,000 premium. The premium is relative to you and your family. So I'm just saying that, for an individual in a particular circumstance to come up with a $5,000 or $10,000 premium, it's almost like the widow's mite. That could be more substantial than the guy who can legitimately pay $1 million a year, but he won't pay more than $250,000. Right. Right. And then, as a side note, because I love you guys, right, and I know there's agents and advisors out there, and if you're not paying a premium, and if you're not paying a substantial premium, quit asking your clients to pay anything. Oof. It's like, I see it all the time. It's like, anyway, it's okay for you to pay a premium. Yeah. Either way. And I know most of you do. I'm sure most of you do, but I'm speaking to the ones that don't, or the ones that have discovered that you should have been or could have been, should be paying more. Okay. It's okay. Be the leader. Okay.
That's so funny. As you were going through it, I'm thinking of how, because I have several people now who are coming back. Speaking of underbuilding, people start where they start, and then our clients are like top people relative to
and the reason why is because they typically listen for generally a lengthy period of time before they take action. And they don't only, I mean, they've heard and they've been exposed to other information out there too, some of the noise. My clients can spot noise. I'm like, oh my gosh, that's a win. That's a home run.
Yeah. But with these people who are coming back to expand their system, I've enjoyed, and I just find it affirming, reassuring, a little ironic about how the language changes, right? If you get someone who's new, just ripe and green to the whole idea, they might say, well, that premium sounds pretty high. And then someone who's really into IBC, oh, that premium was too low. Right. And then, well, when I get healthier, I'll get, when I lose some weight, I'll get started. Yeah. And then they get started. Man, I wish I would have started this sooner.
Yeah. And then I use cannabis or I use tobacco. Can I get preferred? No, probably not. What does that mean? That just means you're not going to get preferred. Mm-hmm. That's all it means.
Yeah. What's my underwriting status versus can we just get the policy in for us so I can pay a premium?
Exactly. And when I say it, I mean, there's a lot maybe behind it, but all life insurance is priced properly.
Right. Perfectly priced. And there's more. Can you send me an illustration? Send me an illustration. No. Versus someone who's already started, do you want to see the illustration? Like, no. Well, it'll be in the policy. It'll be fine. Just get us through underwriting. And then, someone just starting, well, we really got to make, how much is going to go to the PUA? We need to really make sure that there's big chunk of PUA, right? Yeah. And someone who's just started, do we really need to use term? What if I did more on base?
How much does that term cost? And couldn't that premium dollar go to the PUA? Yes, it could. And what does that do to your policy structure? Oh, yeah, I love that. I like that a lot. I love it. I love people, right? That's what I love. You get the young person that has a long-term goal, a long-term vision. They're building their family, they're building their practices, they're building their business, they're building, right? Which is a pretty good mode to be in the majority of your life. Nelson used to say he was more productive in the last 20 years of his life than the previous 60 years. Shut the front door. Right. And then we have people trying to retire and take us out of service. And the whole concept of retirement is a socialistic idea. Mm-hmm. Anyway, I digress. It's the long-term thinker. Right. This is a long-term idea. You want to be your own banker this week or just your life? You don't want to teach your children, your grandchildren, your great-grandchildren how to be their own banker? Maybe we won't be alive when our great-grandchildren are here. Mm-hmm. Does that mean you don't want to build a foundation for them? In such a way that it intrigues them to the point, it's like, my gosh, who was my great-grandfather? And dang, it looks like he was smart, and I want to just see how smart he was. What's wrong with that?
Yeah. Nothing. And speaking about high checking
and account. I know you young person might not be able to think to your great-grandchildren, but some of you will. And the older you get, it'll be easier. Okay.
Yeah. Well, it's the way to think about your father or your grandfather. They were once your age too.
They were.
It just follows that.
And I believe that they were doing the best they could. Yeah. Right? Well, why didn't somebody tell them about this idea?
Yeah.
Life insurance has been around 200 years in the United States. Right.
Yeah. And another point on high checking account balances and all this, I still get a lot of questions, and it's always from the people who they're interested more, maybe even vocationally in economics or Austrian economics or politics or liberty related things. And they're familiar with the fact that the money supply over time on a graph is just a northwest line, diagonal up and to the right, constantly increasing. And so understandably, there's a concern about how dividend paying whole life built for the IBC, how does it relate to, how does it integrate with, what's the relationship between that and an inflationary, meaning increase in the quantity of money, and then the eventual associated increases in consumer prices. Like how, should I be worried? Because you get these Austrians who can't help themselves but be doom and gloom.
And
right?
yes, you should be worried.
Yeah. Well, and sure. And
or no,
fine.
you should be aware anyway. Yeah. Should be concerned.
I'm reminded of I saw a thing from FEE, right? They posted this article and it had a chart tracking the change in prices of goods in different industries over time.
Oh yeah, I seen
that. Yeah. And I'm always reminded of, and I remember when I first met Nelson in the first seminar in Northern California I went to, and I knew he was an Austrian. He talked all about Leonard Reed, and he's real into the Austrian economics. And so, of course, I default think, oh, he's going to be one of these inflation doom and gloom guys too. and he goes, inflation? What inflation?
Right.
And he would talk about the price of chicken breast and the price of bananas back in the Army commissary and what they are at Costco now. Yeah. He's like, the price has gone down. And then he would point out that the 5 factor, right? The things that where the most price inflation has occurred are those things
health,
in which
education, welfare,
right? Those things in which government is most involved in. He's like, so there's no inflation. There's government. That's the problem, right? And I'm like, oh, that was so nice. And it's such a refreshing perspective because Austrians, which is just hilarious, because they think that they're, we care about the individual. Right. And there's these individual decomposed components. But then when we talk about policy or monetary policy, it's these big global
top
aggregates.
Down. Yeah.
It's like all prices are going to go up and all this inflation. And when the money supply goes up, then the interest rate goes up. It's like,
and then we're all going to be in the Weimar Republic.
Exactly.
Oh, yeah.
And it's like, that is not true. Right. Nope. People know that what the price of groceries are. People know what's changed with the price of cellular and electronic technology. People see that it isn't the case that all consumer prices have gone up. And even of those that have gone up, they all don't go up at the same rate, right? And it's like, y'all should remember Richard Cantillon, who was one of the originals in this vein of thought, in this Austrian school of thought, who eventually the term was coined, Cantillon effects, right? This new money, this new general medium of exchange or perfect substitutes for it, this rise in the supply of money doesn't just go to all of us equally at the same time.
No.
Right? It goes to certain people and it affects. The idea is that this new money is going to bid up the prices of certain goods because people who have more money than they did yesterday, because all this money got created out of thin air, they're going to have more purchasing power. So they are going to bid up the prices of what? All goods? No, certain things, right? Yeah. That's why we
Houses,
see certain stock market, fine goods, luxury goods, right? These are the things where prices are bid up first. Factors of production in credit intensive industries, right? Things that where you got to borrow a lot to facilitate the production process. Anyway, so it's in our history. We should know that it's not the case that all prices are going to go up. And lo and behold, like Nelson would point out, the master at bringing it back to the you and me level would point out that is absolutely not the case.
I mean, we got to read history.
Oh yeah, what a concept. and so that should be reassuring. It's like, even when you've got, and look, I agree. I've got an article coming out in the Quarterly Journal of Austrian Economics. I know what's going on with the money supply. I can count it better than the Fed can. But
they can count.
No, our money supply metric is better than theirs because we have a better definition.
They can count. They just manipulate their numbers.
Sure.
But they can count.
Yes. So I'm on board with that. I get that it's all bad and it's stealing and we're, shifting the purchasing power away from the fixed income earners over to the elite. I'm all on board with that. Yep. But it is a bridge too far to go into just universal, ubiquitous doom and gloom. It's always going to be bad, right? No, it's not.
If I had a solution at the you and me level, the Austrians wouldn't have damn near anything to talk about. And I know, listen, I got nothing but love for y'all. You don't have to send me hate mail. I love y'all. And I even know what a good cigar is. And I can help some of you. I'm just saying, what would they talk about? Yeah.
And it's out of love, right? Iron sharpens iron. We got to get more and more precise and correct over time. So it really is out of love and it's nothing personal, but it's not helpful to walk around with this sense of doom and gloom that everything's going to be bad. Now, does that mean that you don't acknowledge what is going on and the nature of the situation? No, but it also means that there is space to organize your personal economy in a way that would put you in a better position down the line. I wonder what way that would be. And this takes us to the conversation of the contract in particular. And I tell to sum it up as precisely and concisely as possible, I tell people, whatever's going on in the rest of the economy, with the value of the currency. Whether you can buy more tomorrow than you can buy today with the same amount of money, regardless of whatever's going on there. Within this contract that's built correctly, comes from the right company, your dollars, which will go in as premium, they will appreciate. Period. You will generate more cash value per premium dollar over time.
Guaranteed.
Period.
Guaranteed.
Don't care what the Fed's doing.
You can't control what the Fed's doing. What? Yeah. Can you control inflation? No, you can't. Can you control taxes? No, they're going down. Right? Legitimately, no, you can try to avoid taxes and legally and illegally. You cannot control the tax environment. You can't control inflation. So then with all of this disinformation, misinformation, and noise out there, the average all-American, if they're not paying attention, they don't know what to do. If they don't read, if they don't know what to read, right? Then it's like, what do we do? Oh, abdicate your responsibility, throw all of your money into a qualified government program because they have your best interest at heart, right? So you can expose your capital to risk. And if we talk about a definition of risk, and we can debate what all that means, but could we agree that the definition of risk is the probability of loss? Okay. Yeah. So I want to throw all my money into a program that was created for my benefit, that I'm paying all the fees for. I'm assuming all the responsibility. I have no guarantees. And I'm going to throw it into a place where I'm exposing my money to the probability of risk over the longest time period. That is not a solution.
I would go even a step further and say,
I'm being gentle,
and say it's an eventuality. It's not an if, it's a when. No because question. So long as this economy is built on the fractional reserve banking system, there will be a business cycle. Okay, there will be recessions and depressions. The value of those stock market prices will go down. It's a matter of time. So there is a sense in which there's a risk to it, but it's more of an eventuality. It's going to happen.
It's cyclical. I mean, it has to happen. That business cycle that you're speaking of. And if you go beyond that, well, what are we going to do without? What would we do without somebody telling us who's going to build the roads and paying the overpayment to build the same people will build the roads. The very same people that build the roads now will build the roads then, and they'll build it much more efficiently at a much lower price. Okay. I'm just saying, well, what about education? Who's going to educate our children? The same people that educate our children now, or maybe there's more homeschooling. I don't know. Okay. Well, the economy, is going to the business cycle that's manipulated, right? The boom bust cycle because of fractional reserve banking. What are we going to do without fractional reserve banking? Oh, I don't know. And we would enjoy an economy among ourselves that is least manipulated.
Just ask somebody practicing IBC what life would be like without fractional reserve banking. Does someone who's fully capitalized has sufficient cash value such that they can take policy loads to finance everything they're doing?
And if I happen to want to go into the market, I can borrow to put money in the market. Wait, what is that a new idea? No, margin. You can the brokers. You can have a margin account tomorrow. You can probably go online and do it, right? All digital now.
Oh, yeah.
Yeah.
You can sign your life away real quick.
And then this idea of like, well, zero, you can go to zero. No, you can go right past zero. So what is life like beyond the market? What is life like beyond the interest rates? What is life like beyond, the credit score? Roll up your arm, Uden. What is your number? And I don't want to, I should put a yellow star on my jacket. I already have one on my license. I'm in Texas. I got a yellow star on my driver's license in Texas. Okay, so I'm not making light of, I'm trying to bring levity to the paradigm that we live in today. Okay. What is life like beyond the third-party lender telling me what and when and how? Oh, I don't know. It's better. Right? I'm not saying that there's problem-free and it solves everything, but oh my gosh, it solves a dang lot.
Yeah.
Yeah. And I'm just telling you it's okay. So don't get hung up on the noise. right? And there's noise out there, and it's okay to learn, and it's okay to start where you're at, and it's okay to build upon what you started. All right? So get to it, man.
And it's all possible. It's
no kidding. And it's so not complicated. You're talking about clients. That's a part of our daily experiences. Clients come in, James, I know you said we were going to start too small, but there's never pressure. There's never, you start where you're at. You start where I've got nothing but encouragement to get you out of your comfort zone. That doesn't mean you're going to overload you with something that's not good for you and your family.
Right.
Excuse me. You're not interested in that at all. Part of my daily, day in and day out, I get to speak with new clients, new prospective clients. And oh my gosh, they fly in and chat live. That's cool. Beautiful thing. But part of the daily experience is, clients is like, well, James, you said we should do this. And I've got enough courage, or I've got, I had that phone call on the way home yesterday. A gentleman, farmer, I'm doing well, producing, family, and he's like, yeah, I want to do what we talked about. I want to continue. It took me a little while. And it's like, no problem. It's your speed. And I've said it many times, we have plenty of time, none to waste, right? It's okay to move forward. It's okay to make the minor adjustments as we go forward.
Course correction.
Course Absolutely. Correction. And if you're not doing that, you have an opportunity to do better. We should all continually improve, shouldn't we? If we can. And so I love it whenever clients come back repeatedly and say, wow, this is better than I thought. This is better than I thought.
I distinguish between like an intellectual understanding and an experiential understanding.
No question.
Like you can know it in your head. You read the book, you listen to the podcast, you've done the homework, you've researched, you're starting your first one. That's all good, and there's value, and you're well on your way. There is another level of understanding that will come through the experience of paying a policy loan, logging into your account, seeing the cash value go up, requesting a policy loan, receiving it, using the money, paying it back.
Taking advantage of an opportunity and profiting from that, being in a better position because you had access to capital and you had the wherewithal to recognize it, and then you had the discipline and the courage to take advantage and do it. We can talk about it, and it's like, we can talk about it all day long until you do it. It's not done. If you don't do it, who will? If not you, who?
Yeah. And then they do, and it's like,
I want to do it again.
Yeah.
And again and again and again and again and again. And it's like, oh my gosh, this is so easy. Why couldn't I get past the word life insurance? And I understand, James, when, because I get beat up, I get pushback, comments, whatever, for talking about the noise. Well, okay, once you're at the level, or, you can recognize the noise for what it is because of your experience and because of your understanding, you will agree with me, I believe. All right. And I get that a lot too. It's like, James, why do these people get hung up on this small stuff? Because they don't know. Why don't they know? They haven't taken the time to educate themselves. And look, going out online and doing your research is akin to Christopher Columbus before, in 1492, before he set sail. If he'd have walked around all of Europe and got hey, what's your opinion? Is the world flat or is it round? The consensus would have been it's flat. That is not research. Oof. All right. Now,
saying you actually got to step out for yourself and go do it?
Well, that's actually absolutely a part of it. You do all the research, but do some legitimate if we're talking about the infinite banking concept, and we are, day in and day out, banking with life. Nelson's book, Becoming Your Own Banker, first book. Second book, Building Your Warehouse of Wealth. His 6.5-hour DVD series is available, and you get a discount if you purchase it, from my office. And you know what? It costs money. All of education costs money. Mistakes will cost you more than education, in my opinion. All right. So you're going to spend the money anyway if you're going to take action, right? So spend the money. Go to the source, right? Get an education. I've got a quote up here on the whiteboard. We do nothing but work. We're producers. I'm a producer. I create content. I do research. And so I'm looking at a quote. You can't see it on camera. And I got this directly from a marketing campaign that targeted me on Facebook, right? And you're no different than me. We're all targeted. The guy said, quote unquote, you can keep taking money out and it doesn't matter because it just keeps making more. Specifically talking about their their version, their bastardized version of Nelson's work, the infinite banking concept. Of course, they named it something else, and that was just one of them. Anyway, my point is, go to the source and educate yourself, right? Get that foundation, and then go waller in all of the noise that you want. It'll repulse you, in my opinion, if you want to know the truth, right? If you read Nelson's works first and then go do the research online, I think you'll clearly see, or there'll be an improvement in your ability to identify the noise. And I'm just saying it'll repulse you.
Along those lines, I have a quick story that I meant to mention earlier, but of a client named Rachel. And do I need to bring a list of clients and throw their names out? I'm just saying. Well, if you can't remember them off the top of your head, you might need to.
I know my clients and I love them.
But Rachel had been a client for about a year now, and I think it's been about not
Rachel.
long, but she's coming back for more, and I'm learning more and more about her circumstances, and she's telling me about what's changed since she first got started. And they started small, and she knew it was going to be underbuilt. And
sure.
So they're coming back to expand the system now that they have that experiential understanding of what really goes on. And as she's done this, it's just, I know she's like me, she can be very charismatic. And so she's telling me, we're on the phone for like 2 hours, right? And it's not even like a client call. We're just having fun. And
right.
And she's walking me through all the different things that she sees now that's changing. Like
in her life.
Yeah. Right. In her life and in the lives of her family. She's like, we're thinking about, having to get trust and stuff in place because we have certain siblings that are not good with money and we're worried about their kids, and
because we love them.
Yeah. And so I'm walking her through all the options with death benefit and how we can structure it with beneficiaries and contingent beneficiaries and the different types of payouts, right? You don't just have to pour a whole lump sum on somebody right away. If you want that to pay out over time, we can do that, right? We can solve for a lot of the things that people might by default think you need some other expensive legal thing to use for. And that could be the case, but if we know what's going on with life insurance and all the options and rights that we have, we can solve for a lot of that just within the life insurance contract itself. And so I'm adding this, and she's starting to see how just with the death benefit alone, right? The cash value is a whole nother side of this, and she's involved in her church and wants her church to adopt what she's now seeing, and she's seeing different things, the whole Rona nonsense over the last year or so. She's like, what skills do I have? So she got into soap making, and she's going to get animals and for her property, and starting to see all these different ways, all these skills that she has that can be integrated into the broader family system. And then talking about her kids, one's about to become an adult, and talking about how they're going to finance a car for him, and what that's going to look like, borrowing from the family rather than going out to a third party lender. And she's telling me all this,
right?
I don't have to volunteer.
That's stimulated thinking that's increasing in the correct direction because of action.
Yeah. It's just taken off. It's just been an explosion of new understanding of how this can all work and how it will work over time, because you just need a well-run mutual company, and then a desire and ability to pay premium,
and a properly structured policy would help you in the long run.
Yeah. And then the rest will fall into place. So long as the people can share the ideas, it's going to fall into place. And even for the people who can't wrap their minds around it, you want to take care of them. There's certain things that can be done to make sure they're looked after for.
Yeah. You bring up charitable and churches. It's like, I have more and more conversations with pastors, preachers, evangelists, ministers, and they're expanding they're getting past this buy term and invest.
That will happen. IBC will get into the church. And
the IBC is going to take over the world, in my opinion. Now we're just talking about timelines.
Matter of time. Independently, financially sustained churches that can last in perpetuity, so long as the future generations of leaders can wrap their mind around what's going on with IBC.
And it's okay to lay the proper foundation for them and lead the way and be the example. Oh, wait, that applies in your business. That applies in my business. That applies in your family. It applies in my family. It applies in everything. What? Mm-hmm. Be the example. Lead the way. If not you, who?
Yeah. I can't wait for the first church one. I mean, I've already decided, like, in lieu of tithing. I met a pastor recently.
In lieu of tithing. Wait, now what do we?
Well, not in lieu of it. You get what I'm saying. Yeah. But I was talking to a guy. I go to this little hangout spot, and I'd seen him there a lot, and so I'll just introduce myself. And come to find out, he's a pastor at
being all charismatic
at a church. Yeah, well, can't help myself sometimes. So I go and introduce myself, and we ended up having an hour-long conversation. Most time I've ever had a pastor spend with me directly one-on-one.
Wow!
Since getting back, oh yeah, and it was like super late. We're just chatting, And so I end up going to his church. This is his first time this past weekend. I'll go again this weekend. Low income neighborhood, somewhere that I would not have gone had I not met this man and got to know him and had an invitation. And so I went. It was, I felt the most welcome and wanted I've ever felt in a church.
Is that the way you're supposed to feel in a church?
You'd think so, but it just has never, you can't really articulate or ask for that feeling. It's like it's there or it's not.
Right.
You either feel it or you don't. And this was the first time I was like, oh wow, this could, I want more of this. I could see how this could be a thing. And,
why isn't everybody a Christian?
So I'm like, and it really felt,
and I know most of you are,
and it really felt like, and I understand tithing and active obedience and all that, but setting that aside, there's still a feeling of, if I give them these financial resources, is it going to be properly stewarded?
Sure.
Or is it going to be flushed away? Like, I know at churches I've gone to, there have been big old embezzlement scandals and stuff in the past.
Sure.
Like, and I it's just whether that's
some of those guys need, 1 or 2 or 3 or 4 planes.
Yeah, right.
I mean, they gotta fly the gospel all around the world,
right,
$55 million.
It's hard to shake that, It's like, and I do this for a living. It's like I live this. I live proper stewardship of money, and so it's hard to set that down. But anyway, it was much easier at this church because I was like, and I'm looking at the building, and I'm like, we need some work to be done, and I knew the guy was not extravagant. I mean,
listen, you're charismatic, humble. But you have a strong back and 2 hands too.
Well, we could talk. I mean, I offered you to help you with your driveway, and you haven't told me once whether you want me to come out and help you. So
but can you drive a tractor?
I offer. Yeah, look, it's a wheel. You point it straight and you drive. But look, I'm sitting in this church with this guy, and I'm like, I really feel like I could be helpful here, and it would be put to good use. It wouldn't be squandered. Yeah. And he had even asked, I do not lead with what I do with anybody, right? And I don't even like when people ask because then we got to talk about it and life insurance and it's just not going to go anywhere good.
Psychology.
Yeah.
That we're surrounded in when it comes to life insurance on purpose. Don't think it was by accident.
But this gentleman had been, led to become a pastor much later in his life and was really not he was brought up in the church, but fought it for a long time to lead the church. And so he understood. I think he understands, this contrarian style of thinking and being aware of preconceived notions. And anyway, so we got talking about what I do finally, and
finally got around to
it, and talking about IBC. And as on the drive home, it occurs to me, why go and try to get someone to understand this? Why don't I just do it? Why don't you just say, hey, listen, Mr. And you person who gives to the church, just consider this for a moment. Why don't you talk to, if you're a senior member, the senior pastor, the elder counselor, whomever is leading the church, and why not have a conversation with them and say, hey, I'm going to give you this money, right? I was going to write this check anyway for an offering or a tithe or what have you. And, but consider this for a moment. What if I insured you instead? Right. And then the money I offer my donation to this charitable entity can be used to pay the premium so that the entity itself doesn't have to find the money to pay the premium anywhere else. Right. And that way we could get this properly structured IBC style contract up and enforced and owned by the church. And then we'll have a little conversation. Got to learn how to use it. Right? I don't want to take ownership of something you don't understand. So we'll have a little conversation about what it means and what you can do with it. And then when you, senior pastor or senior member in the church, when God calls you home, all this money is going to come back to the church. And then, but while you were living, you're going to have all the use of that cash value.
Listen, man, that's just one. Yes, this is beautiful. It's like, how many board members are there? How many elders are there? How many bishops, whomever they call, whomever the leadership, whatever the terminology is used in your denomination, right? How many of them are there? And do they rotate? Are they insurable? Some are, some aren't. Okay. And even the preachers, the pastors, the evangelists, whomever they are, right? They rotate too. Wait, even the congregation rotates. I mean, that's okay. So if they're insurable, and some are and some aren't, in the congregation, if you're insurable, some are, some aren't. Listen, everything that you accumulate and don't give away or spend is going to be left to someone else anyway. You know, and this charitable giving is nothing new, but we're just bringing a new element to it when we consider the idea of high cash value dividend-paying life insurance. You're a tax-free entity. The MEC doesn't matter. A MEC is a MEC is a MEC. But wait, you're a tax-free entity. Wait, you're buying buses? You're supplying income, right, to the preacher, to the pastor. And you're supplying retirement income to the preacher, to the pastor.
Helping people out with rent, you name it.
Oh, the benevolence fund. Maybe you've run a little private school. And maybe, you know, your students and their families have a hard time when the government cracks down on something like the new variants and corona and all that. And I'm not saying it doesn't exist. You damn right it exists because it was created. My opinion, it exists. All right. Well, just clamp down the free economy among men or people, right? Don't let them go to the grocery store. Don't let them go to work. Require something that's a violation of their personal property, right? To go to work. I'm just saying that we all sometimes need help. All of these churches, all of these schools have a benevolence fund, right? Because the congregation gives. Well, where is it? It's in somebody's brick and mortar bank. And do they pay you a dividend? No, they don't. Why? Because you don't own the bank. All right? So your money has to go somewhere. You, the church, the private school, everybody, every business, every family, especially these tax-free entities, the money must reside somewhere. All right. And so you're buying buses, you're funding missions, you've got the benevolence fund, you're funding income and retirement income.
Sounds like
expanding.
Sounds like churches have a need for capital.
Right. Oh, but wait, let's go to the a variant of Wall Street, to the bond seller. We'll create a bunch of church bonds for all you people. The congregation can buy these church bonds. And I'm not disparaging. I'm just saying historically, there's a lot of this goes on. These church bonds pay 4%, 5%, and 6%. You know, you give us the money, we'll pay you an interest, and then the coupon at maturity, and then we'll lend you the money to build the church. Isn't that banking? The movement of money? Yeah. So we're all doing it. Anyway, so Nelson talked about it all the time. You take an average, town, this little old town that we live in and we're speaking from today is about 4,500. You know, somebody dies dang near every week out of 4,500 people. Just think if 4,500 people had life insurance, they don't have to be great big $1 million policies. No. They don't have to be $10,000 premium. But if every insurable member of the congregation and the board and the staff had a little bit of a life insurance policy and you're paying premium anyway because you're tithing or you're gifting money, and then, oh my gosh, 1 or 2 generations from there, then you're broke free from the bondage of third-party lending. Oh, I don't know. And what about the tax-exempt status? Who cares? You know, can you still preach the truth? I'm just asking questions, and I don't want to go too far off, but
there's so much.
There's an opportunity for you, whomever you are.
That's going to happen.
It is going to happen.
Someone who is a member of the church can start it. Someone who has connections to the people in the church can start it.
I don't know. Just give a few life insurance policies to the church and graduate. And somebody somewhere along the way, I don't know how many Nelson gave to churches, quite a few. They're like, wow, this idea, people should be giving us more life insurance policies. And then it's like, wait a minute, look at all that cash value and the death benefit. I know I only got the death benefit because the guy graduated, but if you give them a policy, right, they get an annual statement because it becomes theirs now. And you can get a tax deduction for that donation. Oh, wait a minute. Can't they look on there and read the line that says cash value? They can read. Can't they look on there and say, oh, loan available? Oh my gosh. Oh my gosh.
Just got to find people who are willing to reconsider their preconceived ideas about life insurance.
Yeah. It's like, you either have ears to hear or you don't, and it's okay.
I love how you say, will you be healed?
That's what Jesus said.
I know. But you brought it to my attention.
Yeah. Will you be healed? Yes. Thank you. Please.
I'm satisfied.
Are you satisfied?
Yeah.
You're living large, being all charismatic. Perfect. I had fun. That was good.
That was good.
Yeah. Thank you for listening. We enjoyed it and hope you do as well.
Bye, y'all.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.